Hey everyone, thank you for joining Archangel Alts, and here we are continuing in a process of our introductions to stuff and also things. Watching that fuel, hoping for it to get up there again. Want to see our 3.14 close before Pi Day, our 314 position. It was 2 away twice. Oh my goodness, how painful. Okay, so what we're doing with this video, we're going to go into some specifics on candles and specifically Doji candles. So this is an introduction to that. I know we have talked about it. We looked at how that works with the timeline. Here's our timeline. Here's our value of the coin. And as we look at the candles, this being a good example of what I like to call the Morse code, when the volume just kind of taps out, which is really unusual to see with something with this much volume, to have this much Morse code. That is just how much the tsunami effect of Bitcoin's volume is affecting things. So what we have looked at in the previous videos with the candles is that they're measuring time, but they're also measuring movement. It's really just a brilliant thing. Let me go to something with a high capacity. Something, gosh, what would you use? I don't know. All right, so you can see some of these candles, they all look, relatively different from one another. This one is mostly just a block, but you can see a tiny bit of a candlestick there and a little bit more of a candlestick, sorry, a wick there and a little bit of a wick there. This is our candlestick. Okay, we have a longer wick here, shorter wicks here, all sorts of different variations. So now what we're going to go into is a little bit of a definition of what these indicators are supposed to represent, what they're called, what they mean, and then kind of look back over here and just kind of see that that movement is in fact happening real time. So here we go. When we call them Doji candles, what the heck? What are we talking about? And I'm going to load this one up first. And all of these links are going to be in the videos, so you can go and read them at your own pace. Here we go with candlestick patterns. Okay, some of the earliest technical trading analysis was used to track prices of rice in the 18th century. Much of the credit for candlestick charting goes to Munahisa in this range. Formation of the candlestick. Geographical representations of price movements for a given period of time. They're commonly formed by the opening, high, low, and closing prices of a financial instrument. Okay, so increasing, bullish candlestick. Decreasing, bearish candlestick. We have our open and our close range, and our open and our close range. Now, what you'll notice here is as it's increasing, we're always talking about, green good, red bad. I mean, just to be simple and a little bit silly about the simplicity of it. Wow, that might be too big. Take it back, take it back. Okay, thank you. Funny. Okay, so increasing, meaning that it's going up. So that means that, there was a previous candle before this, right? Then we get to here, and it opens here, and it closes here. Now, we might have the lowest low and the highest high beyond that, and that's kind of that wick range. The meat of what happens is going to happen in here, okay? In a perfect world, if this did exactly, in addition to our MACD being a perfect sine wave where it's just up, down by exactly the same amounts, we would see the same thing here. We would have an open and a close, and an open and a close. And every single position, day in, day out, at the opening and closing of the market, or an opening and closing of a certain time factor, whatever that determined amount is, we would see an absolute balance of those two. So we see a wick, and one thing that I'll say about this that you're going to learn very early on is that this presents the basic idea of what it is that we're looking at, okay? But in my opinion, the most valuable information with it is what's happening live in front of you. It's always adjusting to something. So when we go into the more advanced stuff for our paid subscribers, we're going to go into more of that. So we have these examples of all the different patterns that it can do. I'm going to use a different reference for that. And, we're not going to go into memorizing every single name for every single pattern, okay? I will show you as we go along. Okay. We're not going to university to do this for the next year. We're looking to get into the market and make use of this. So I might cover this all together in one, long advanced study. But the thing that you need to understand is that there are patterns and they mean something. So we're going to go over the most basic of them and then move forward from there. So the Doji element of that, it's named after this guy. Well, it's not named after. He's thought to be the originator of the idea. And, just using this to measure the buy low, sell high. So we've got the period of time's lowest lows, highest highs. This is where it opened and closed. This is where it opened and closed. When it's increasing, it's bullish. When it's decreasing, it's bearish. And that process happens constantly. So we will go over a little bit of these patterns, and I'll go in more depth in another one. But what you need to do is to recognize what it's doing and have the instinct to work with that. Okay. So the Doji is a commonly found pattern in a candlestick chart of financially traded assets, stocks, bonds, futures, cryptocurrencies, and technical analysis. Okay, so we're going to do a simple video on FA and TA, and then one video on FA only, one on TA only, and then we'll have more advanced on those. But in technical analysis, that's reading the charts and being able to predict things by seeing the analysis that's in front of you from all of your indicators. It is characterized by being small in length, meaning a small trading range, with an opening and closing price that are virtually equal. The Doji represents indecision in the market. A Doji is not as significant if the market is not clearly trending, as non-trending markets are inherently indicative of indecision. If the Doji forms in an uptrend or downtrend, this is normally seen as significant, as it is a signal that the buyers are losing conviction when formed in an uptrend, and a signal that sellers are losing conviction if seen in a downtrend. Okay, absolutely true. You may be thinking, what does that mean? If you're confused at all, don't worry about it. You have these resources to read. It'll sink in. But the experience is what's going to get you there. Neutral Dojis form when the opening and closing prices are virtually equal. Alone, Dojis are neutral patterns. Okay, so what they're saying is that this would be a neutral if it was just itself on its own. Long-legged, this Doji reflects a great amount of indecision about the future direction of the underlying asset. Yes. And what you're going to notice if we watch it live over time, it's not just whether this is long or not, but whether the body is, the buying and selling that's happening is increasing and decreasing a lot and getting narrower and narrower. It might drop way down here and then come back up here. And you're thinking, people don't really think that it should be down here. You might see the value go way up here and then kind of hover around here longer. And you're going to see, not a lot of people really think that it's worth that up there. So they're testing it kind of in this range, but nobody really knows what comes next until something decisive happens. So I'm almost looking at this like I'm reading hieroglyphics and I understand them. I look at this and I'm like, oh yeah, I know what that means because I've seen it so much. Gravestone. The long upper shadow suggests that the direction of the trend may be nearing a major turning point. It is formed when the opening and closing price of the underlying asset are equal and occur at the low of the day. Okay, yes and no. We might not be talking about the low of the day. We might be talking about the low of a minute, 5 minutes, 15 minutes. Maybe a day. Yeah, I mean, if you're extreme long term, sure. Dragonfly, the long lower shadow. So this is the long upper shadow. This is the long lower shadow. Suggests that the direction of the trend may be nearing a major turning point. It is formed when the opening and closing price of the underlying asset are equal and occur at the high of the day, or the high of the minute, or that certain pattern before it reverses. A doji is a key trend reversal indicator. This is particularly true when there is a high trading volume, yes, following an extended move in either direction. In fact, what do they say about volume? In capital markets, volume or trading volume is the amount of a security that was traded during a given period of time. In the context of a single stock trading on a stock exchange, the volume is commonly reported as the volume of shares that changed hands during a given day or minute or hour. Yes. When a market has been in an uptrend and trades to a higher high than the previous 3 trading days, fails to hold that high and closes in the lower 10% of that day's trading range, there's a high probability of a downtrend in the ensuing days. What it's saying that if it hangs in an uncertain part too long, there's going to be a reversal. It's going to stop doing whatever it had done. For price, Doji is a horizontal line indicating that high, low, open, and close were equal. Okay, thank you very much for that. Excellent website here, Investopedia. And I'm sure that their academy, all of this stuff is of a great value. I have no problem mentioning something where somebody has done a really great job. In fact, I don't know, is all of this okay? Yeah, so I mean they charge for what I'm sure is well worth that cost. When we're doing, when we're converting some of this, introductory and advanced video information into our courses, obviously we will, be adding a lot of our custom information and giving lots of on-market examples. But we're going to be doing that with you live as we go along. And as we add anything that is a course, when you are a $99 a month reoccurring subscriber, not only do you get to trade with us live, but all of that course stuff that we add will be yours automatically. So high price, low price, low price, high price, high price, low price, gravestone, long-legged, dragonfly. We're not going to worry about memorizing all the different names, okay? So don't even worry about that part right now. But here's the way that it's defined on Investopedia. Really good website. Glad that they provide this information. What is a doji? A doji is a name for a session in which the candlestick for security has an open and close, virtually identical, often components and patterns. Doji candlesticks look like a cross, inverted cross, or plus sign. Alone doji are neutral patterns that are also featured in a number of important patterns. A doji candlestick forms when a security's open and close are virtually equal for the given time period, and generally signals a reversal pattern for technical analysts. Yes. In Japanese, doji means blunder or mistake, referring to the rarity of having the open and close price be exactly the same. Depending on where the open-close line falls, a doji can be described as a gravestone, long-legged, or dragonfly. Key takeaways: it's the name for a session in which candlestick for security has an open and a close virtually the same. Alone, their neutral patterns, also featured in a lot of other patterns. Doji formations come in 3 major types, and then we saw a whole bunch of different combinations and setups. So all of this is here for you to read. Some really good examples, but I think that you might... Hey, there's the RSI. Nice. Hey, there's the MACD. Hey, nice. So we might go in a little bit more detail here in our advanced video on the candles. But, it's there for you to read whatever kind of level of information you're wanting to learn. You might memorize all the names and you'd know more than I do as far as that part. But it's going to come down to instinct. And if we're learning this because we want to get good at trading, then, you're going to learn what you need to know to be good at trading. The doji is an transitional candlestick formation signifying equality and or indecision between bulls and bears. That's why I wanted to load this one up, because now we're talking about it in terms of the bulls and the bears again. We saw a little bit of that in the Wikipedia. A doji is quite often found at the bottom and top of trends and thus is considered as a sign of possible reversal of price direction. But the doji can be viewed as a continuation pattern as well. Absolutely. They linked together, and it's kind of like if you were learning those 3 main patterns and you said, okay, well, that's the basics of doji. Imagine if it's an alphabet and you're now linking together, letters to form words. That really is very similarly, you start reading your charts as if it's telling you a story, and the story is this value is going to happen here. The creation of the doji pattern illustrates why the doji represents such indecision. After an open, bulls push prices higher, only for prices to be rejected and pushed lower by the bears. However, bears are unable to keep the prices lower, and bulls then push prices back to the opening price. Of course, a doji could be formed by prices moving lower first and then higher second. Nevertheless, either way, the market closes back where the day started. Now, the way that I interpret that, talking about like reading it like a novel, there is no beginning and end to this book, hopefully. But, we're not looking to reach a conclusion where it's at the perfect open or close price and we're done. We're kind of coming in like in chapter, 2 or 11. Well, let's not do one that stands for some kind of debt consolidation. We're coming in chapter 13, debt relief. No, we're coming in the middle of the book somewhere. And we're just going to continue reading, and the end is never going to be in sight as far as we're concerned. So, these give some really excellent examples. But, you can see that the open is right here, and it's marking the close there. Here's a downtrend. This is the Pinterest button. You don't usually see this in the charts. Okay. So we're going to walk through the patterns. You're going to get my interpretation of it, but all of this is there for you to learn, exactly the way that it goes down, the technical representation of this information. So one last reference, because I like, they're kind of giving us, similar. I like it because of the Bull of the Bear reference. I don't think that we need to go over this part information again. It's the same thing. 4 types of Doji candlesticks: common, long-legged, dragonfly, and gravestone. So, before we were just talking about long-legged, dragonfly, and gravestone. So, I did talk about, you'd have a perfect plus sign, basically, or a cross. No, more of a plus sign for the common. Doji represents a supply-demand equilibrium. Yes, exactly. A tug of war where neither the bulls nor the bears are winning. Yes, exactly. In the case of an uptrend, the bulls have, by definition, won previous battles because the prices have recently moved higher. Now the outcome of the latest skirmish is in doubt. Meanwhile, after a long downtrend, the opposite is true. The bears have been victorious in previous battles, forcing prices down. In this case, the bulls have found courage to buy, and the tide may be ready to turn. This might sound like somebody is reading way too much into the way that this stuff is going, but this is exactly it. This is the novel that we're reading. There is personality in the tug of war. I kind of see it, the push, in both directions. And the reason that this is so beneficial, if you think about, we talked about support and resistance in a previous video. Think in terms of, you have these support lines where it tends to not go beyond that line. But if it does, then you can almost kind of guarantee that something more drastic happens, because the psychological element of breaking through that line. Now, the fact that people have lots of buy positions and lots of sell positions that need to be reconciled is not, you wouldn't think that to be a part of a psychological process. It's just the order book is mathematically trying to work its way through, a constant averaging process. But everybody's decisions are based on, should I let this do this? Should I let this do that? Maybe I should put a bigger position, and maybe I should adjust this position. Maybe I should break it down into 15 smaller positions. We do all of those things to hedge against the likelihood that something might change, or to move in the direction of something that is at our advantage. So the push and pull is absolutely there, because that line of support, it takes a lot for it to break through that often. And then we have a line of resistance that's higher than it, that people kind of continue to keep pushing it down, saying, we're not going to allow it to go beyond this line. It's only worth this much. Very, very interesting. And the supply and demand is, I'm not willing to spend more, than $1 for this. And this store might say, well, it's worth $2. I'm not going to sell it for anything less than $1.85. There's that supply demand, kind of bargaining their way towards the center. And you see all of that happening in the dojis. Very, 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 very cool. So the reason I mention all of that is because, like what they're showing, this is a trend. These are different trends that are going. And if you look at a static picture, you can learn a lot from that. We see one of the patterns. We see a different pattern. We see now it's reversed and it's doing the other pattern, et cetera, et cetera, et cetera. But you're going to get so much more from this when you see it happening live, when you see that battle ensuing, the push and the tug, the bargaining of price representing itself in this candle. This is one of the most brilliant things. I love the artistry and the creative spirit of analysis. There's just such brilliance in Just like VWAP, there's such a simplicity that's just so genius. So why it matters: after a long uptrend, the appearance of a doji candlestick can be an ominous warning sign that the trend has peaked or is close to peaking. Dojis should not be assessed mechanically, however, However, after a strong trend in either direction, they can often mark major turning points. Always recognize the doji when it occurs and be prepared to take appropriate action. Very, very cool. So I want to bottom line this as an introductory video. When I come back here, now that we have learned all that stuff, okay? Two main takeaways is that these things are happening live. You're not just looking at what happened and reading this like, previously on Doji Candle. And what's going to happen next? What happens next time on Doji Candle? This is a live updating process. There's no guarantee that this is going to be this pattern. Okay, look, it just changed. It changed because it's updating to this. Once it's done with this 1 minute, it's buying, it's selling, it's up, it's down, it's changing according to what we see happening in the order book, what it's resolving under the hood. Very soon, this minute is going to be up. And whatever it did at the end of that minute, the second it goes from 59 to 60, it will start the next candle, and that candle is going to pick up wherever that left off. So it could have been red, it could have been green, it could have been up, it could have been down, it could have had a wick at the top, wick at the bottom, wick at both. This is a perfect example. It's done just about every one of those things. But our minute's going to be up, and it's going to end either green or red. It's going to end either up or down. Okay, there we go. See? So it ended red in here, but we saw that it looked like this at one point in time. It was green sometimes. It went up and down. So I love, studying this at the live moving process. And let me see if BCD was still on the run. Isn't it weird that we just talked about BCD? And there it goes. Or maybe it's already done. No. We don't have it over there. Okay, gotcha. This should be faster moving at this point, unless it's already slowed down. This was quite a run that it had up here. Made it to the 300s. Wow. That's pretty awesome. I might actually... Oh, I don't know. We have some old ones that have been holding up for a long time. But if it can actually do this from getting pumped these days, I mean, my goodness, look at that. That's crazy. If it can get up there, might it someday get back up to... Can I even see it from here? I mean, look, that's it's just right there. Oh my goodness, isn't that great? So yeah, that's just incredible. That's like 20x, 30x kind of stuff. Don't think we need anything close to that, but I am thinking I'm going to let this, it seems like some of these new averages are holding in there for some of these coins. Kind of neat trends going on. Anyway, yeah, I'm going to get back to it. It's just pretty funny to see that. So here we are back at the minute, and I don't know if it's actually still moving as quick as I thought it was before. I know it was before. It might give us some better examples of what's happening. The main thing that I want you to see is that it's not like, just going back and doing a recap on what's already happened. Each of these are stagnant. They've already finished what they're doing. But that when it's drawing it live, it's telling us a story. And these do happen in combinations of things. So, this ended here, and then it continued this story here. It hit the lowest point here. So we have our high, our low, our open, our close. So somewhere in here, it hit this range, okay? It might come right in at an upside down pattern or a standing up pattern, all sorts of different stuff. So let's see what happens when it finishes this. Right now, it's been selling. It's been selling down to here, selling down to here. Okay, bought a little bit back, selling. Now it has to do, an actual trend before you'll actually see it go into a buying pattern. So, even when you have less down, it's going to deal with the open or close value, okay? So it started here, and because it is going up from there, look at that. The buy and the open and close, same place, right? Just like we were reading. So now it's in an upward pattern from there. That doesn't mean that it can't reverse and go down. It can. And it'll turn red if it goes down beyond that point. So this suggests that it might take a transition into a different shape. So we'll see. So it has to sell beyond that line for it to change from green to red. It hasn't done that yet. Okay, now it did. See, it went beyond that line, it turned red. Now somebody's going to buy in there and it's going to go up again. Okay, but it's not sure. This is an indecisive type of formation, okay? So that, this is the idea of what I'm talking about. You see, it's kind of like reading a story. You're watching what's happening. You want to see a lot of movement. Volatility is good. Mass adoption comes from liquidity. Remember that. Crypto revolution. Leaders. Yes. Okay. And so the last thing that I want to mention about this is that if there was no wick pattern developing at the tops and bottoms or all the way to the cross, there would be no doji element of the candles. Okay, we would just have this block and it would get bigger or smaller and it would change from green to red and go up and down. There's still a lot of information there. But when you add the value of the changing in trends right there in line with the same actual chart information that is measuring time and value, based on price, you get these trend lines, these reversals, these suggestions that there's uncertainty or panic or discomfort or reevaluation of different prices at different points. And then you see that at the pace and the up and down of the open and the close of, just minute by minute, second by second, 15 minutes even. It's just really, really interesting. Now, if you look at the same thing longer, you can watch, for 30 minutes straight, you'll see it go up and down and change from green to red, do all sorts of different stuff in this one single candle pattern. But without the doji, you would just have the meat of this. You would just have a live updating chart bar that goes up and down with whatever the trend is doing. And if it's going down, you will see it turn red when it goes beyond the open point, whatever that period of time is. So that is your deeper dive into the candles and the doji element of the candles. I hope that you found this interesting. Thank you so much for watching, and for now, Archangel Alts out.